Afternoon, everyone. It's Chris from Axel as well as Solstice. You can find us on the website, Twitter, which is X, Instagram, Discord. Remember, this adaptive algorithm can be used for side market, up market, as well as down market. We're not a broker dealer. Our past performance doesn't give us any indication of future results. Use at your own risk. And remember, check the weekly video. It's on YouTube for free. Subscribe, hit the smash button, share with your friend. Let us know what you think. Let's go to the first slide that I have up here. I had used this on February 22nd, and I said, was this sell-off the beginning of something cooking under the hood? So we eventually, that engulfing candle that we had that tested the 50 simple moving average, which is in yellow, eventually we lost it in the following week. I have it in the prior week showing you where we retested, and we came back to the 5.65%. We eventually lost it, tested the 200 SMA, which was, from the November levels of last year as well as the September, and we eventually got a reversal hammer on Friday. And I said, pay attention to these sectors with the S&P 500 as well as the Nasdaq 100, and we talk about the Mega Seven or the Fantastic Seven, which are Apple, Amazon, Google, Google A, and Google L, Meta, Microsoft, Netflix, NVDA, as well as Tesla. Let's go to the next slide up here. And what I wanted to show you is to keep an eye on the 11 sectors in the S&P 500. We had consumer staples, XLP was a little bit negative, as well as the financial sector was negative, part of the S&P 500. And utilities was up, technology was up, real estate was up, industrial was up, healthcare was up, as well as telecommunication. And the discretionary, consumer discretionary was basically flat for that day, and energy was up quite a bit in the S&P 500. If we take a look at the S&P 500 from the 6147 all the way down to Friday's low, we had a 7.83% decline. But we recovered with a reversal hammer after testing these the July of 2024 highs, the September, August, as well as the reverse coming back through the November, as well as the beginning of November of 2024. The lows up here, then the recovery, and we retested and got a reversal back from that 7.83. We recovered to 6.14% from the lows, which was a 1.68% reversal back up. But from the Thursday close, we only recovered on the S&P 0.55%. So let's go to the next slide. And remember, check us out, get in contact with us, smash the like, give us your commentary, and share with your friends. Let's go to the first slide that I have up here. What I wanted to use is the SPX. You can see I have it marked here. This is the same slide, but what I wanted to do is activate this line so everyone can see it, activate it. You can see I took the highs to the low. That was a 7.84. If I take it down to here, you can see the recovery was 6.14%. But if I reverse it from the bottom to the low, you can see that 1.83. And if I do it from the Friday close, we had a 0.55% decline. Reversal back positive for the week. But if I take for the whole week, if I remove this whole line, remove the drawing, if I take the Monday, Tuesday, Wednesday, Thursday, Friday, we were consolidating in this box. Every reversal down, we had a recovery on Wednesday. Thursday was a sell-off, recovery, a portion. Friday was a sell-off, recovery, back up, and it was an inverse hammer. Can this inverse hammer create a rounded bottom to continue higher, or do we continue and end up losing the 250 SMA coming back to the 2024 September? I am not biased. We're going to be fluid with the market, trade what you see, not what you think. And remember, flexibility, you can break if you hit a piece of rod or steel so much, eventually you can bend it, and eventually it cracks and breaks. Be fluid with the market, keeps you out of trouble without being biased. Let's go to the next slide that I want to do up here. I want to take this off. I want to show you the mega 8 in here, and the Mega 8 is basically including Netflix in there. I included Netflix. You can see in the reversal after going from top to the bottom, we tested the 200 SMA and the retest of the 1030 as well as the 11.6. That bar was a U-turn, as well as this one here on 11.15. That was a double bottom continuation. Retest the breakout up here, rally up, consolidate for 3 weeks, and eventually in the last 3 weeks we fell off sharply. Is there going to be enough sufficient that this 200 SMA hold us, or do we retest the 250 SMA and this large consolidation in this area in the Mega 8? This by adding a plus sign on Apple, Amazon, Google, Netflix. You can see that in the Nasdaq 100, Apple recovered 1.59%. Amazon was a little bit down. Google and Google Alphabet were positive. Facebook was a little bit negative. Microsoft was down almost 2%. Netflix was down 1.6%, and NVDA was up 1.92%. So if I really want to look at these sectors broken down separately, what I want to do is basically take a look at what Apple did in relationship to the overall market. I do have these measured move in Fibonacci's. I want to take this measured move out of the way. If I, hold on, no. I want to take this Fibonacci out, remove the drawing, and we can see that reversal down, rally back up, reverse down. We got two hammers here, and on Friday was a nice positive day on Apple. Even when we were going down, Apple was holding up, and it's basically closed just slightly above the 50 simple moving average and the backside of this uptrend channel where it came down to retest from the prior trend. I have these two uptrends, and we have this uptrend up here. Is there going to be continuation to the upside or consolidate before continuing up? We are holding the 200 SMA on Apple. And if I take a look at the NVDA, NVDA seems to be a little bit more daily NVDA. And I wanted to show NVDA ever since we had a reversal hammer. But remember, we lost the 250 and the 200 SMA. The 50 and the 18 crossed way up here on that reversal down, rallied back up, couldn't make it. We are in a downtrend, and if I connect these 3 points here and I get a linear regression downtrend channel or just an auto channel that I drew, whether I connect it this way or connect it this way, you can see that these two channels are identical, and there's a midpoint here. If I duplicate this channel, if I go duplicate and grab this channel and put it up here, that's your center of gravity for that range coming back to it in order to clear the 250 SMA. We have to pay attention to that on the daily if there's going to be reversal in NVDA. I prefer taking a look at Google. Google looks a little bit more healthier if you noticed. And after the Monday dive down, we recovered the 250 SMA. We tested it so many times. We have the 200 SMA right above the 18 and the 116. If there's going to be consolidation and a reversal in Google, you have to clear this section here where we fell down from when we retested, fell down, came back to this area, fell down, rallied up, fell down, rallied up, and broke out. This area very important, the 175 to 176 in order to clear to run back to the 38, 50 and 61% in Google. I'm not saying to be in it. We're going to trade what we see and pay attention to these sectors, part of the Nasdaq 100, the top 8 mega. So that's why I wanted to cover only these two companies and NVDA. So let's go now take a look at the XLK in the tech sector by itself. You can see that the tech sector, after the move down, we had a reversal right at the 50 Fibonacci on the daily chart in XLK. AI Q, which is the AI ETFs. You can see we had a double bottom. We are holding the 200 SMA, but we have the 116 right above. If this is going to be a reversal, pay attention to it. Let's take a look at J and K in the bond sec. J and K. We can see that in J and K, we're holding the 200 SMA. in Bloomberg Berkeley High Yield Bond. So that's one sector to take a look at it. I want to take a look at and New York Composite, the New York Composite here, which shows you that the New York Composite on this week, every time we had the that was the Tuesday, Wednesday, Thursday, then this is the Friday reversal back up. We are holding this consolidation here that we tried to break out of. We came back, retested at what missed the 200 SMA and reversed back on the New York Composite. So let's pay attention to that. And I would pay attention to XLP in ETF consumer staples. You can see that the consumer staples, even in this bad week, the market consumer staples were holding very well in consolidation in relationship to that. Look above here, retest, look, fail, retest this area. We are still in consolidation to see where we go from here in staples. Let's take a look at right now the SPY, and what I want to do in the SPY, I believe it's in brown. That's the SPY electronically traded fund, part of the S&P 500, and I'll do the QQQ. And what I wanted to show you, every time we had the Tuesday down, we had the rally Wednesday. We had the Thursday down, we rallied back up, and on Friday rallied and we closed above the 200 SMA. So if I want to look at the measured move in here, I want to convert this to from a daily to intraday. We're going to take a look at a 20-day or 30-day range. And what we want to do is use a 6-hour or 4-hour chart. It doesn't make a difference on the levels. The overnight action is in gray color. The trading hours, the New York Stock Exchange till the close, are in the dark black color area. So if I take the from the high on Monday all the way down to here, and I want to do a measuring tool, what I want to do, take the high from here all the way down to here, extend it. And what I want to do is extend it back a little further to show you how to look at it. So even if I go till beginning of February, and what I wanted to do is go back this way. What I want to do is show you on the daily chart, on a daily chart, 3-month, how it will look like. Or we can do a 6-month. Let's do a 6 months so everyone can see it. You can see where the consolidations are in relation. Even if I just grab this and extend it all the way back, let's say till 2024 February, I just wanted to show you that this consolidation here, this breakout, we had this gap, we retested it here, rallied up, correct? And we fell back down after these consolidations here. We can see we retested this area and we're trying to recover. If we can recover this or consolidate and make a rounded bottom, there's a reversal on the charts on the SPY. So we're going to remove it. So I wanted to show you how it will look like on the daily chart. If I want to take a look at just the overall market on the 3 instruments without including the small cap, the IWM or the RUT, you can see that in the E-mini, S&P, Nasdaq, and the Dow, this reversal, we retested this large consolidation here, broke below this level here from the January and reversed back. So if I take a look at the high to the low for the year, from this high all the way down to the low, we had a 7.76%, but the close after Friday, we recovered to 6.21%. So that's part of the combination of those 3 instruments. If I'm going to take a look at the NDX, the Nasdaq 100, we can take a look at the high all the way down to the low. This is in bearish territory. We had an 11.19% down from the highs of the February high till the March. But if I take the close look at it, it's a 9.1. Does this mean we're going to recover that gap that we filled here? You can see we tested it, rallied up, tested it, fell through it, coming back through it. This is no longer valid, but it's forming some kind of volume in this area, so we no longer need it. We're going to remove that rectangle. I duplicated it twice, so I don't know why. So if we clear the 200 SMA and make a rounded bottom here, and reverse and clear the backside of the ADX consolidation of these 3 areas, then we have potential to change in the trend in the Nasdaq. So if I take the RUT, We can see the Russell just from the highs in February all the way down here. That was a 12.6%. And we can see that small cap still under 10%. Is this the tone bearish? Yes. Have we retested the lows? Yes. So the most important, even if I take it from the November high, from the prior year till this low, we had a 17.5% correction in the small cap. Since we have not been able to recover, I'm paying attention to small cap as well as mid cap, just letting you know if there's going to be a reversal opportunity to purchase in the small cap. So let's take a look at one more, and I wanted to use the micro ES, and I want to do the micro ES to show you how to do the measured move in relationship to the overall market. We know that that was Friday, that was Thursday, Wednesday, Tuesday, and that was Monday. If you look, Monday was a sell-off and they brought it back a little bit. Friday was that was Tuesday, sell-off and rally back off the 200 SMA. This is Wednesday, Tuesday, Monday. This was Tuesday, sell off and rally back up off the 200. Wednesday was a sell off, rally back up. Thursday was a sell off, but closed right around just underneath the 200 SMA. Then on Friday, we sold off to almost to the 250 SMA. We missed this gap. You can see that this gap, we missed it right in here. I marked it. I'm going to remove it to show you how it looks like. You can see that there is a gap in the profile here. If I just get a box from here all the way down to the right side of this candle, this is the gap we have on the charts in the S&P or the E-mini 500. So we missed the 250, rallied off there and closed just slightly above the 200 SMA. In case we do create a shoulder here, this is considered the head. This is the head, this is the shoulder, and we create a shoulder here and rally back up to the 38 and 116. Don't come back and say, hey, I didn't warn you, but we have to trade what we see. So if I'm going to zoom in here, if I'm going to zoom in to the right here and I want to use the measuring tool, what I want to do is go to an intraday. Once again, intraday. We're going to go, let's do 90 days, even with a darker area. We're going to do 6 hours so everyone can see it. We can see that this area here that we had the highs on Monday through the Friday low, if I measure it and I extend this back 3 month back or 4 month out, even if I go till the 2024, let's do it 2024. It's okay going back that far. So what I want to do, go now to an intraday instead of the 9. We can use the 90-day to show you where the levels are of this consolidation and the breakout. Here we almost tested it. Here we almost tested it. Here we almost tested it. Here tested it and rallied off. You can see that the 50% is very important part of the Fortune 500 E-mini to clear this area in order to run back up, even if we create a shoulder. So I am expecting, remember, we had this oval from way back up here. We retested that 5,700. Even if we create a shoulder here and continue higher, that would be great because we are in that downtrend channel. So we can use a downtrend channel here. I want to mark it to everyone can see what we're doing. We can do this like that. You can see it's a little bit higher, but instead of using this, I'm going to grab this one and this one. We can see we are in a linear regression downtrend channel. And what I'll do, I'll connect this one to here so everyone can see it. We broke out of this channel in this one in the overnight, so we're sitting right on it. If I take the lows and highs, we are in the middle of this wedge in case it creates a shoulder to continue higher and clear the 38. I'm not biased. If we still continue lower, that is fine. But if I get a reversal here, we got to pay attention to it. So what I want to do, go for an intraday. We're going to go to a daily. We're going to go 9 month out. 9 month. And we'll put daily. And you can see that this level of consolidation, that was the zero line. If we end up losing it, we lose the gap. I'm looking for the backside of 5,600 before coming back up, and that would be the 20% reversal from that zero line. This was the look above, fail, retest this area, consolidate, fall back halfway, come back up, and we rallied higher. We had a couple of weeks down here, then we fell further down. We are in a wedge on the S&P 500, but I am paying attention in case it does a shoulder in order to continue and break through this channel. I'm not biased. I'm going to trade what I see in case things do turn and Friday's reversal bar is telling me something, or there's going to be more continuation to the downside because we had 4 days come down and rally up, come down, rally back up. So I hope this video was very helpful. Once again, get in contact with us. We're here to help. Take care.